This is the briefing for Friday, January 9th. Well, I certainly am feeling very bullish this market, especially as the S&P tries to break out to the upside outside of an area of rotation it's been in for quite some time. This is the spiders on a daily basis, and you can see the rotational pattern that it has been in for quite some time. This goes all the way back to October of last year. And you can see then even a shorter term rotational pattern that occurred at the upper extreme of this area of rotation. So a breakout of this area would be a breakout in multiple time frames, which should be a fairly good move. Now, this is today's trading, so you can see that the spiders have broken out. They're testing this day, which was 3 trading days ago, and potentially have the potential to extend these gains, and we could see a very, very nice rally unless there is some type of geopolitical or economic news that is just unanticipated at this point in time. A little concerning about volume. This is volume in the spiders. You can see how it is declining as we go into this breakout. This breakout should be attracting new buyers, but it is typical for traders to step back when you reach a support or resistance area, major support or resistance area, to see if there's enough strength in the market to drive it through. And then you get some guys that begin to test the water and try to drive it up. Usually is on low volume. And then if more buyers start to come in, you'll see an extension up, and you'll see the breakout will be pretty significant. So I'm not too worried about what's happening with volume here, although if we see much more upside, we're going to need to see volume beginning to turn up. 52-week highs minus 52-week lows improving very, very nicely. Breadth has a slight divergence in it. This is breadth in the NYSE. So you can see that it is really declining as we go through this rotational pattern. A little bit of a move to the downside in today's trading, but I don't think that's anything significant that would suggest that the rally is a false breakout, at least at this point in time. And net volume is down in the NYSE also, as you can see here. So it's going to be important when we do see more extension up away from this key reference area, that we see volume increasing and we see net volume beginning to support the move as well. A little different in the NASDAQ. This is the Qs on a daily basis. You can see the area of rotation, one area of rotation, then another area of rotation that is basically in the middle of this area of rotation, not really testing the upper extreme as the spiders were. Volume falling off, and then of course we've got a decline in market breadth also. So the NASDAQ certainly not looking as strong as the S&Ps are, and of course net volume is falling off as well. So it's a little disappointing to see this much of a rally in today's trading, to see volume down, breadth down, and net volume down also. But although I have to quantify this in that these are very light declines, and nothing glaring that would suggest the potential that we're going to see some type of dramatic rotation back to the downside in Monday's trading. So this is all positive. Looking at resistance in the Qs at the 630.50 area, and then the next resistance would come in at the 636 area. Breaking this sloping trend line here would suggest once again that we're going to test the lower extreme. But I really think that there's enough euphoria in the economy and the market, at least right now, that we're going to see potential breakout in the indices. Now, the Russell, represented by the IWM, has already broken out, and you can see that it has extended outside of this area of rotation and this area of rotation and exceeded the false breakout of these 2 days here. Still, breadth is declining in the Russell. Volume is just basically flat, but really not anything you would suggest is attracting a lot of buyers to the Russell, but certainly it is outperforming the other two indices, at least at this point in time. Net volume still a little concerning, but once again, I think the rally is on. The breakout is I should say corroborated in the Russell. with the S&Ps. They're trying to break out and above the resistance level. Q's the only ones. The NASDAQ is the only one that is basically lacking or not following suit at this point in time. In terms of overbought and oversold, we are neutral, and so this really gives the indices the opportunity to continue their rally in the first part of next week. Now this is NYSE, so you can see it is not really, the indicator is not really converging, but it is in the NASDAQ. This suggests a tightening in the market where we could see a really good move in one direction or another. If that happens in the NASDAQ, that would allow it to catch up with the S&Ps on their breakout and the IWM, the Russell, on its breakout as well. Looking at total volume in the indices, in a little bit of a tick down in total volume in the NYSE. Net volume still a little concerning that it continues to keep dropping. So this is net volume is up volume minus down volume. So that's not real positive, but that could change pretty dramatically. Same thing with the NASDAQ, net volume down pretty dramatically. Overall volume in the NASDAQ has been declining. By the way, these spikes that you see here, those are typically around option expiration days, where you get a balancing of positions. So I'm not real concerned about these spikes. But you can see over the last few days, volume is beginning to tick up in the NASDAQ. Overall, it was declining. Now we're seeing some increases in volume, which is positive for the potential for a breakout rally. And also near term, you can see that we've had some pretty good days in terms of net volume, although falling off in yesterday and today's trading as well. Looking at the percentage of stocks above the 20-day and 50-day moving average, they're expanding. This is for the NYSE. I'm sorry, this is for the S&P 500. So you can see percentage of stocks above their 20-day moving average. This is a percentage of stocks above the 50-day moving average. So certainly the rally that we've been seeing is well participated. This is the NASDAQ, percentage of stocks above the 20-day moving average, percentage of stocks above the 50-day moving average. So you can see that it is improving as well. And in the Russell, percentage of stocks above the 20-day moving average and percentage of stocks above the 50-day moving average. So we're not seeing any divergences there. A little bit of divergence here. If you look at where this high is and the high from today, and you look at where the percentage of stocks were back at this time as opposed to today's trading, there's a divergence right there. But it's basically eliminated in the 50-day moving average, as you can see right through there. Going to be an interesting week next week. I think that the rally should continue, although keep in mind that the markets in all degrees of time run and pause, and that potentially we're going to see the continuation of some type of a run and then a pause, a run and a pause. Keep your eye on what's happening with the internals, especially if we see follow through on Monday and we take out today's high. The internals should begin to improve. If not, then that's going to be a red flag that potentially there's something else that is getting ready to happen. Have a great weekend. I'll pick this back up again on Monday for subscribers.